Welcome to another edition of our weekly market analysis series. I trust you're all having a fantastic weekend. In this video, we will be revisiting the XAUUSD chart, where last week we saw the price of gold plunge to a new monthly low following the strong US employment data on Friday. Starting with last week's trading setup on the 4 hours time frame, this is what we were looking at prior to the beginning of last week. We were lucky enough to capitalize on that initial 600 pips bullish momentum all the way into the $2,380 area. Although we missed out on that initial bearish move from that $2,370 area, but we managed to catch that sell off after the breakdown of that key level at the $2,325 level, closing the week on a positive note. For a detailed breakdown of each of our entry points last week, please refer to the link in the description box below. Now, as we prepare for the upcoming week's trading activity, it is crucial to acknowledge the shift in market sentiment, which is brought about by the recent developments. The stronger than anticipated US NFP report has raised speculation that the Fed might delay cutting interest rates, potentially capping the uptrend scenario in the gold market. Additionally, there has been news from the People's Bank of China pausing its 18-month buying spree, with their current gold reserve remaining unchanged at 72.8 million trout ounces at the end of the month of May, and this may further impact the uptrend scenario as well. Now, given this latest twist in market dynamics, how will the market interpret and react to this data? Personally, I foresee heightened volatility in the upcoming week as market participants will be focusing on the upcoming US inflation data and the Federal Reserve's monetary policy decision for fresh impetus. Now, with gold prices down by 4% from its record high, could this be the perfect time to buy gold at a discount while prices are lower? Or will this mark the beginning of profit taking activities leading to a massive sell off? By leveraging our basic tools like the economic calendar to trend lines, key levels, and chart patterns, together we will work to unravel the potential direction of price action in the coming week. But before we dive into the details, please note that this presentation is for educational purposes only. Remember, forex trading carries its own inherent risk, so proceed with caution and seek advice from professional financial advisors before making any investment decisions. With that said, let's dive right into the business. So, our first point of contact for this week is going to be on the daily time frame as usual. As you all know, we do want to be having an holistic perspective into what is really going on in this market. And what I did here on the daily time frame was to take into consideration the character of price action since the month of October of last year. That's an historical data of about 9 months, and this was what I was able to come up with. Well, the first thing you will observe here is the fact that price action has been very bullish. And to further emphasize the strength of the buyers here, you will see that price action had transitioned into an ascending channel. And after connecting the series of higher lows here, we have the support line of the ascending channel, as you will see here. And then after connecting the series of higher highs, we have the resistant line of the ascending channel. Now, zooming into the structure, you will see that since price action broke out of the resistance line here at the beginning of the month of April, price action had spiraled all the way up into an all-time high area around the 2450, and in fact since the beginning of the month of April, price action had remained above the resistance line of this ascending channel to emphasize some buying power around this area. However, following the better than expected NFP data last week, Friday, we saw price action drop back into the ascending channel, trading right below the resistance line of that structure. Now, in addition to this ascending channel, is a couple of levels that we are going to be using to navigate the current market dynamic. And one of this level is going to be serving as our key level for this week, which is the $2,325 area. Remember, this level was also serving as our key level for last week. And of course, you know how we use our key levels in this community. As long as price remains below the key level, we want to be looking out for patterns and structures that supports the idea of selling. And we are not going to be buying unless price breaks above the key level on this chart. Now, with the way things are going right now, you would agree with me that we are at a crucial juncture where price action has broken down the key level at the 2325 and as well broken down the resistance line of that this ascending channel. Now, the question going into the new week is how will the market participant be reacting to this important confluence? Are we going to see continued selling pressure below the resistance line of the ascending channel and our key level at the 2325 to respect the structure one more time, maybe into the support line of that ascending channel, dovetailing to about 1,400 pips to catch there? Or are we going to see price action climb back above that key level, where of course price will be back above the resistance line of that ascending channel to incite more buying opportunities? Now, for us to answer this question, we have a simple trading setup on the 4 hours time frame, which we are going to be using to navigate this current market dynamics. But before we go into the 4 hours time frame, it's important and it's our practice here in this community to keep tabs with the fundamental factors that will be influencing the sentiment around this area during the course of next week. Now, by monitoring the economic calendar, we aim to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, of course, timing to position ourselves in such a way that we can capitalize on the next potential move. Now, based on the asset we are monitoring for this week, we are going to be focusing on economic features from the United States alone. Now, on this calendar here, the first high impactful event is coming in on Wednesday, that's June 12th, and it's one of the major highlights for the week, and that is the Consumer Price Index. Now, for those of us who do not know, the Consumer Price Index is a measure that examines the average change in prices paid by consumers for goods and services in the last 30 days. Now, it is important to note that a higher than expected CPI data can lead to concerns about inflation, impacting the market sentiment as it may prompt expectations of tighter monetary policy to control rising prices. Then, on that same day, we will be looking forward to another high impactful event in the form of the Fed interest rate decision, an outcome of the Federal Reserve meeting where they decide whether to change or maintain the current interest rate. Then we also have the monetary policy reports or statements, to use a better word, which is a comprehensive assessment provided by the central bank detailing the economic outlook and the rationale behind monetary policy decisions. Then, to cap it off on that day, we are going to be looking at the FOMC press conference, where the Fed chair will be communicating the central bank's the monetary policy report and economic outlook, and of course, answer questions from the media. Then, fast forward to Thursday, we will be looking at the producer price index, another key leading economic indicator that measures the average change over time in the selling prices received by domestic producers in the US economy. And then on Friday, June 14th, we are going to be looking at the publication from the University of Michigan, which is the Consumer Sentiment Index that gauges the prevailing sentiment and confidence levels of consumers in the US economy. And of course, this data here provides valuable insight into potential shift in economic conditions. So, these are the high impactful event for this week. You will agree the next week is jam packed with a lot of high impactful event, which may bring some liquidity into this market, and there is a high chance that we will be seeing some volatility. So, the anticipation of this event, of course, has a way of influencing the sentiment in the market, which obviously will reflect on the chart as price action. Now, talking about price action, let's scale back down into our 4 hours time frame, where I did mention earlier that I have a simple trading setup that we will be using to navigate that confluence we identified on the daily time frame. Now, right here on the 4 hours time frame, what I did was to take into consideration the character of price action since the month of March. That's about 3 to 4 months thereabout. And from the look of things, it's quite obvious that the market has been bullish. And in fact, on the 4 hours time frame, I was also able to identify an ascending channel. Now, if you look at this closely, connecting the series of higher lows, we have the support line of that ascending channel. And then when you connect the series of higher highs here, we have the resistance line of that ascending channel. Now, if we zoom into this current structure, you will see that despite the strong bearish momentum that started a couple of weeks ago, as soon as price action tested the support line of the ascending channel right there, had a 2000 300 area, we saw some little bit of buy pressure around this area. And in fact, the last week trading session closed exactly at that point where the support line of the ascending channel meets. Now, one interesting thing about the support line of the ascending channel is the fact that it falls within a robust demand zone, which has been consistent with buying pressure since the mid month of April, as you will see here. So, that area between the 2,325 and the 2,285 has always been a robust demand zone, as you will see. Every attempt by sellers to break through the structure has always been met with strong resistance from the buyers. And every time you see price comes in, buyers take over the market, and of course, you will see prices back into that area. Now, the question here is, will price action respect both the demand zone and that support line of the ascending channel to incite an uptrend continuation, where we shall be looking forward to some sort of reversal pattern, maybe in the form of a double bottom structure, inverse head and shoulder pattern, or even a falling wedge to incite new buying opportunities. Maybe our key level at the 2325 could be the neckline that will guide that uptrend move. However, if that is not going to be the case, and instead price action breaks down both the support line of the ascending channel and that 2285 area, that marks the robust demand zone, then we'll have no other choice than to be part of a selling opportunity. So you would agree with me that we are at a crucial juncture in this market. We are depending on how market participants react to the structure at the beginning of the week will determine what our next line of action will be. Trust me, I will be with you in the comment section of this video at the beginning of the week after monitoring how market participants react to the structure during the first early hours of the new week. If you have found this content helpful and useful in making your independent trading decisions, I'll really appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and of course, it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them. Thank you very much as you do so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you'll always stay updated with the latest ideas I share and, of course, receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.